I want to introduce the event in general. I am Jodie Barrow. I'm a tech recruiter at Darwin Recruitment. After speaking with developers, I'm seeing that a lot more people are keen to get into the blockchain space. And that's why we decided to host a meetup to bring you all together, share ideas and experiences. We are on quite a tight schedule, so if we kind of have to cut some of the speakers short, then I apologise now. The setup for the evening, we'll have 2 speakers first. We'll then have a short break, followed by 2 more presentations. After that, there'll be some pizza and drinks for you to enjoy before we finish off with the competition. First of all, I'd like to introduce Max, who is a sourcing director from Iconic Lab. He's going to give us an overview of blockchain, ICOs, and the industries that it affects. So please welcome Max.
Thank you. How can I go to the next slide?
There we go. That was my introduction.
Ah.
Don't know, just bringing up my picture. Maybe, can we get one of the technical guys to...
There you go, so you swipe.
Ah, okay. All right.
There you go, swipe left and right.
All right. Sorry. So good evening, everyone. With a little bit delay, I'm here. I'm Max. I'm one of the co-founders, sourcing director, and managing partner at Iconic Lab. The other managing partner is just over there. It's Pat, but he's a little bit exhausted from yesterday from his brilliant talk in Frankfurt. So I'm going to talk about blockchain technology today a little bit, and then more specifically about ICOs, the challenges we are facing, and the chances that are associated with it. So. First, start with the blockchain itself. So I'm not a technologist, so I will try to explain it very, very easy, in easy words. So it's nothing more than a database, basically. So you store data in it, you write data into it, and you can read data out of it. But it is decentralized and it is distributed. So it's not only on your computer where you can access it, but it's on, in the case of Bitcoin, for example, it's on 7,000 nodes, where everyone can read it and can actually prove the transactions that are made there. And I want to use the Bitcoin example tonight to show you how this actually works. So imagine I'm transacting Bitcoin with you, you are transacting Bitcoin with someone over there. There are a lot of transactions going on, thousands of transactions that they have to get verified. How do they get verified actually? That's the big question here, because we don't trust anyone. But they get into, you have to imagine it as one very, very difficult equation that has to be solved at the end of the day. And a lot of miners all over the world, a lot of nodes trying to solve that. And the one who solves it first actually gives the solutions to the other nodes, and they are trying to find consensus into that equation. As soon as this is done, the transaction will be closed and it will be in the block. And the next block in the chain is existent. And the good thing about it is that in the block itself, you will always have a small hash that all the blocks before, the data from all the blocks before, are also saved in this single block. What does this lead to? That this is always very transparent. You know immediately what transactions are made by whom, and it's always secure and immutable. So you can see that this is decentralized, and some of them allow also for smart contracts, because smart contracts is also one of the buzzwords you are hearing everywhere. What is a smart contract? Actually, it's nothing really special. Some blockchains allow for smart contracts. For example, Ethereum, you have Neo, you have Cardano, you have NEM, you have a couple of others. It's a self-fulfilling contract. So for example, if you want to pay out a dividend via a token instrument, that's always a smart contract. Or other intermediaries like lawyers or notaries, they could also be replaced via a smart contract. So it's something which fulfills itself on the blockchain. And I think one of the most interesting things is, or what people are questioning a lot of times, is how is it possible that it is transparent at the same time and anonymous? It's transparent in a way that you will always see every single transaction that was ever made, and it's immutable and safe forever, but it's anonymous. So there's no identity actually bound to your address or to your, to your public key. I think that's the most important thing to remember here. It can be in general a public chain or private chain that are also buzzwords you will hear very, very often. A public chain means it's accessible, it's tradable. So for example, all the coins we are looking at that are public chains. But for example, IBM is also offering the Hyperledger, which is a private chain. It could be used for corporates that are using it internally. And in some cases, the private chain is better. In other cases, the public chain is better. And it's unhackable because you have to imagine if you look at Bitcoin, for example, it's on 7,000 nodes. It's not possible to go on all of those nodes and hack them at the same time and put the same value into it and fake it. That's simply not possible. And how does it actually, or what industries does it actually affect? I could name hundreds of industries that would be affected by the blockchain, but I just want to give a few examples here. So start with real estate. For example, maybe you have heard of Raidao in Malaysia. They were the first one who made it possible that you actually raise funds via a token instrument and then develop real estate projects. Or you can also register your property on the blockchain. That's also a great use case. And furthermore, you have, for example, payments. I think every one of us today is, of course, aware that you can pay in Bitcoin, even though you don't want to buy a beer with Bitcoin with the transaction cost at the moment. But for example, with Monero or some other coins. Then you have betting. So we don't need the intermediary, the betting bureau, but we could just bet against each other. Wagger, for example, does that, if you have heard of them. Also humanitarian aspects, I think that's one of the most important points. If you think about MoneyGram or Western Union, I think you're well aware of how they are functioning. So people from poorer countries go to richer countries, they are working a lot and they send the money back. But what actually happens, you are in the US and you work and you put $1,000 into your MoneyGram counter, then maybe $890 come out at the other part of the world. And that's simply not fair, but they can do it because it's the only possibility for a long time. But now you could do this via a blockchain protocol. Only one guy in the other country would need a wallet that's accessible to the other people, and they could directly get their crypto coins out of there with maybe 2% of transaction costs. The healthcare space. So we could get much more, I will come to that later actually, we could get much more research and a much more holistic view on your HRI data. Also voting for long term. I think no one would ever doubt again that Trump is elected or that the Brexit just took place if we would do the voting on the blockchain, for example. And of course, what I will talk about now, of course, also investing. We don't need 10,000 of intermediaries to invest our money into a startup, for example. We can just use an ICO. And I think to understand what an ICO is before, you really need to know how the early stage investment process is actually functioning at the moment. So this is the VC model, more or less. So investors would give money to a VC fund. This is controlled by the VC management. And the VC fund itself gives funding to the startups that they are selecting, and they are targeting an exit strategy. An exit could be an IPO, so if they issue their shares, or it could be a merger, or it could be an acquisition. Then at the end, they would get the returns to the VC fund, distribution to the investors, and always management fee and carry, so the incentive fee, would go back to the VC fund itself. That's the 2 and 20 clause. So what problems are associated with that? Is that venture capitalists are the gatekeepers, so they choose what startup to fund. And I think that's not fair. I think you as an investor should actually choose what startup to fund. Secondly, you have actually no choice over the investments that are made. And you have no liquidity. So first of all, for a VC fund, you have to be very, very wealthy. You need at least, let's say, $100,000, for example. And even if you have that money and something changes in your life, I don't know, you want to become children or you want to buy a house, for example, then you are in this fund and you can't get your money out of it for 7-8 years. That's a big problem here. It's quite expensive with the 2 and 20 clause. And furthermore, you have very, very subjective valuations of the companies. I mean, every VC will tell you, oh, we are using a very good DCF method. We are using a multiple analysis or something like that, but that's bullshit, to be honest. That are purely assumptions that are made into a mathematical equation, and it's the same as evaluating an ICO. It's nothing more than assumption. It's based on assumptions. And I think the worst part is the process can take so long because VCs will always negotiate the most favorable terms for them. While you as an entrepreneur should actually really focus on your business development, on your technology, and on all that stuff and how to get good people, for example, to your business and how to sell your company, you are negotiating terms with them that they can maintain some control. So by definition, what is actually an initial coin offering? I now really much compared it to the VC space because that's the early stage investment process, but from a technological fundraising perspective, it's much more comparable to an IPO. So when companies or corporates are issuing shares, for example. And how does this whole graphic actually change if you do an ICO? You have a liquid market for secondary market for liquid transactions. And the benefits for investors are really great. You can choose what startups to fund. You have a liquid market, and you have a cheap and efficient token management. So you can always, for example, rebalance your portfolio. The benefit for the startups, I think I mentioned before, quick and easy fundraising, more time for business development, what really counts, and maintain control of your strategy. What does this actually mean? You can be very creative in the token world. Imagine you would open up a bakery today. It doesn't mean that you have to give a dividend to your shareholders and that they have to control your business, but you could think about, okay, every investor, for example, gets bread for free every Sunday, and on Wednesdays there's free beer. And you could do this all via smart contract tied to your token. And this is like, one of the most famous graphics in the traditional financial world. It's the J-curve. So normally you have like 8 stages of financing that potentially could arise while you're looking for another funds. And now this gets much accelerated in the ICO world because you're an entrepreneur, you have some money to develop your prototype, maybe you have some angel investors in some friends of you who would invest into your company, and then you're going for an ICO as soon as you have a prototype. And now the big question is what actually comes out? Is it a share? Is it a debt instrument? Is it just a useless instrument with no intrinsic value? It really depends. Everything can come out dependent on the smart contracts that are tied to your token. On the very left ones you see cryptocurrencies or utility tokens, for example, that are normally tokens with which you can pay within the ecosystem of your platform. On the very right side you see the securities, which for example have a dividend or a buyback clause, and that are treated as securities from the regulator itself as well. Then you have access tokens where you can access certain services. They are also treated in another level. And you have hybrids, which can range from the very left side to the right side and combine all of these functionalities, basically. And as you can see, ICOs are becoming a big, big topic at the moment. The number of ICO projects fivefold from 2016 to 2017. The money raised 39-fold. And ICO-funded blockchain projects are now at 60% already. I think it's understandable if you look at the advantages of the ICO space. Now I just told you how good ICOs are, but that's not the whole truth. There are a lot of issues and a lot of problems in these markets, and I'm personally really concerned about it, but I'm quite optimistic for the future. So first of all, the startups are lacking pre-seed funding, so they don't have money to develop a prototype, for example. A lot of funds are solely raised on a white paper. I don't know how this is possible, but it is, because it was so fancy. They had like buzzwords in it. Scams and fraud. For example, there was a US student who had, like, how it is in the US, $200,000 of debts because he had to finance his college studies. And then he thought, okay, I will just bring out a fancy white paper, use some buzzwords, use a little bit of AI, big data, blockchain, and it worked out. He raised $350,000, disappeared the next day, and his study fees were covered. The legal framework, it really depends on what jurisdictions you are in. I mean, Peter will, the next speaker, will talk much more in detail about that, I guess. But it really depends on what jurisdiction you are and what you have to take care of. But always make sure that the ICO you're investing in is set up in a country where you have some trust, where you have investor protection, that they can just not go away and leave you with no money. Then unaudited token contracts. That's also a big problem because in the real economic world, you will always see that on everything, on a business model or on processes, there's always an audit. maybe one of the big four, KPMG, AY, or something like that. That doesn't exist in this professional manner in this world. Some companies like Token as a Service, for example, offer that. They have a third party audit on smart contracts. Why is that so important? Because when the smart contract is not secure, people could always attack the smart contract and steal money out of it. Fifth, over-liquidated projects. That's a big concern at the moment. We have nothing like an investment bank in this space. Normally an investment bank determines how much money you should raise and how much your business actually should be valued at. We don't have this here, so people are just going to raise as much as they can. But if you look at Tezos, for example, it was ridiculous what they just raised. And that's a big problem here. And then the lack of transparency, because you're giving them your well-earned money, you're throwing it at them, and it's like a black hole. It just disappears. You have no idea where it is, and that's why, for example, we are together with Sentiment are working on the project transparency, where at least 0.5% of the tokens which are raised have to be tracked in a wallet tracker, that you know where your money really goes to. I think that's a responsibility you need for token investors. And the future ICO landscape, even though we are seeing this many issues, and this is so disruptive, we see it quite optimistic and positive actually, because more regulation is coming in. Now all the idealists and a lot of people out of the crypto space would actually run away, because that's now not how it was set up, and that's not what they want to see. But I think it's the only way that you will get rid of all the scammers and that you find really good projects to finance. And since so many projects are trying to raise funds via an ICO today, we think that much more quality ICOs will survive. So it will be less quantity and more quality over time. And decentralized wealth, I think that's the most important point here, that for now it was like in certain countries you raise money, you spend money, but there are always geographical barriers. And I think blockchain and especially the ICO world really have the potential to eliminate these barriers. Yeah, and now to what we are doing in this space. So we are an ICO and token launch accelerator program. So till date, 165 companies, blockchain and crypto companies applied to our accelerator program, where we help them with legal, with business development, with marketing, with investor relations. And 5 of them were only chosen to our first batch of the accelerator program. I think I can skip that due to time issues. And what's really, why I'm showing this slide, it's a really ugly slide. Yeah, I don't want to show it, but I have to, because there's like no due diligence at the moment in these markets. People who say they do due diligence, they maybe have like 4 variables they are measuring, and then they say, okay, that's a good ICO, that's a bad ICO. But this is actually how due diligence in the real financial world looks like. And we, with our backgrounds in the financial world, so in the venture capital, private equity, and financial asset manager space, we are able to actually bring that knowledge to the crypto space and to bring the best out of both worlds together. Because we love everything about the crypto and blockchain space, but there's like no quality control, there's no due diligence. And that's, for example, how our process looks like. And that's what I already mentioned. And I think it's always really, really nice to show what is actually possible with the blockchain and what kind of projects and startups are out there. And that's, for example, Topple. That's one of our accelerator program companies. It's actually the first one we have admitted to the program. They are from the US, and they did research on international investing. What they found out, I mean, I think you're all well aware that we send money, for example, to Africa. We also send a couple of people to Africa to help them. But that's not enough, because what we are not doing, what we are totally ignoring, is to invest into their infrastructure. We are not investing into the companies that are out there, and we are not investing into the farmland there. And that's a big problem. And why are we not doing that? It's because there is the transaction costs are way too high. If I privately want to invest, and I'm invested in a startup in Nigeria, for example, if I privately want to invest there, it's very, very, very expensive, because there are so many intermediaries in between. And secondly, it's the corruption, of course, because you don't know what the state does. You don't know what the corruption policy there is. And with a blockchain protocol, you can actually solve both of these issues. It's much cheaper to invest there, and you can get rid of of the corruption, or not rid of it, but you can at least track it, for example, if you have a wallet tracker and see exactly what the money is spent for, because the blockchain can never be changed. Another very interesting use case, I think, is the health space. I talked about it a little bit before. So I think all of us, we are going to doctors, let's say to a psychologist, then to an internist, to someone else, and they are all having their own analysis of what is wrong with you in different fields. But actually that never comes together. Even though we know it all belongs together, the body, the mind, and everything, it never comes together. Why? Because the data is not shared in a centralized environment. But with a blockchain protocol, you would have the option to actually get incentivized with a token. Let's say, okay, I want to share my health-related data only if I receive a token equivalent of 20 euro. Then I would share my data, anonymous, of course, with a third party. And that way, you can find a more holistic analysis of your health as well as better research. Because the researchers can really incentivize you to share your data only with the researchers. I'm not talking about insurances or stuff like that. And that way we are getting a much more holistic healthcare environment. Should I? Yeah, yeah, I thought so. Yeah. Okay.
Did you just want to round up? Or?
No, thanks a lot. Yeah.
Sorry guys, as I said, we are pushed for time, so we'll leave questions right till the end for the networking session, if that's okay. Our next speaker is also on a tight schedule, so I won't take too long just to introduce Philip, who actually created and built a website at the age of 12. He went on to be the tech lead at McKinsey and is now the CTO of BrickBlock. Welcome.
Hey guys. Is this actually doing anything? I don't think so. For the live stream, gotcha. So first, hi, my name's Philip, and I've never used a touchscreen TV before, so this is pretty awesome. Let's see if I can get to my slides here. There we go. So, starting off where Max left off, basically, we actually did an ICO, 2 already. So we did one ICO that is split into 3 phases. And there's a lot of lessons that we learned. I'm going to skip through some of the slides because it's usually a 30-minute talk, and I'll have to compress it down a little bit. First of all, what is BrickBlock? And maybe one roundtable question first. Who of you owns cryptocurrency? Who of you owns ERC20 tokens? And who of you has invested in an ICO, like not bought it on an exchange, but an actual ICO? Okay, interesting, cool. Yeah, diving right in, so we're BrickBlock. We are basically trying to disrupt the number one from Max's slide. We're trying to disrupt the real estate industry. And how it works is basically we are enabling crypto investors to change the asset class without having to leave the cryptocurrency ecosystem. As you might have realized, there's a lot of ups and downs in cryptocurrency, and not like 5 to 10%, but more like 80%. And there's regular crypto bloodbaths, as the community likes to call it. And what we are trying to do is we're trying to enable people to switch the asset class without having to sell their crypto for fiat again. And how it works is basically you pay Ethereum on our platform, you receive an ERC20 token in return that is pegged to an underlying piece of real estate. And BrickBlock is a wordplay of 2 words. It's brick from the real estate world and block from the blockchain. And what we're doing is basically 50% tech and 50% legal, so one doesn't work without the other. And yeah, so much about us. And I explained that. Let's get to the ICO. So we split it in 3 phases, and a lot has happened. So when we designed the ICO in like June or July 2017, it was 10 years ago in blockchain time. So there were no well-tested ICO crowd sale contracts. There were no best practices, or they were just emerging. And so we decided to just use a normal wallet and split it into 3 phases. We raised round about $5 million USD from the first 2 parts of the sale. The last one's coming up in Q1 or Q2. And we accepted multiple currencies: Ethereum, Bitcoin, Litecoin, and fiat currency. And we were worldwide with some exceptions at the time: USA, China, I think meanwhile it's Singapore, and some of the other jurisdictions that have rulings that disallow ICOs. Let's get to the lessons, and there are a lot of them. So an ICO is exciting, but it can also be pretty tough. Lesson number 1, if you're trying to do an ICO, get a lawyer. Seriously, like, do not try to do this without a lawyer. We have a good legal team, thankfully, but even still, for them it was all new. And the regulatory environment has been set up in the fiat world, so a lot of the existing rules, some of them can be interpreted in a crypto way, some of them can't, so it's a big gray area in a lot of jurisdictions. It's slowly emerging, but you have to constantly keep up to date. As Max pointed out, maybe even better than I, there's several categories of token classes emerging. I mainly categorize them into utility tokens that do something, that act as a coupon or a membership or anything. And then there's the equity or security tokens. And why thumbs down? It's not that this is a bad token, it's just legally it's a lot tougher to pull off. Because if you're classified as a security in the United States, the SEC is going to be busting your balls. And if you're not really well prepared and don't want to pay 6-figure legal fees before you even get started, you should probably think about whether you really want to do an ICO. Do your due diligence. What jurisdictions have rules against ICOs or around ICOs? It gets tougher and tougher. So really the most important takeaway is, if you're trying to do an ICO, definitely get a lawyer. Lesson number 2, know your target audience. Many ICO investors are not crypto savvy. So we started out thinking, hey, ICO, it's all going to be crypto nerds that know about cryptography and we'll have it all figured out. Wrong. A lot of them do not know anything about cryptography. They might have read about ICOs or Bitcoin craze online and try to hop on the train. We have a lot of hilarious war stories of people copy and pasting their private key in our public Telegram channel. We accumulated a lot of private keys through forums and channels and support forums. So you will have to use very easy language. You will have to not only explain what you're doing, but you will also have to explain what is blockchain, what is Ethereum, what is an ICO. You're basically an ambassador for the whole community, which is cool, but be prepared. And no matter how many big exclamation marks you put there, even if it's in red, even if half of the site says it, people will send money from exchanges. So have your rules in place and be very upfront what happens to these people. Lesson number 3, for us, that's a big one and was a big pain point. If I would do it again, I would only accept Ethereum. Because if you're doing an ICO and you're selling an ERC20 token, or whatever the new standard is going to be, then people will have to have an Ethereum wallet anyways. And in our experience, it doesn't make a big difference. Like the secondary channels that we offered were definitely way less than half of the Ethereum contributions. And it just increases your complexity a lot. So for example, if you accept Bitcoin, then fine, you got a contribution in Bitcoin and somebody can prove that he sent you some Bitcoin, but how is this person going to prove? This person is going to need an Ethereum wallet address to receive their tokens, and how can they, in a trustful way, tell you, hey, this is the Ethereum address I want to receive my tokens in? How do you link that without opening yourself up to scammers? And if you accept fiat, that's going to be even more complex. Now you're trusting a third party that accepts fiat, will probably convert it on behalf of your investors into some cryptocurrency, Bitcoin or Ethereum typically, and then send it to you, and then you have even more mapping to do where a transaction came from and how many tokens you owe these contributors. Like I said, contributors will need an Ethereum wallet anyway, so you might as well just take only Ethereum. And these days, the tools get better and better to shape-shift cryptocurrencies around and trade one for the other. So that was a big lesson for us. Sidebar, this is our current process for all the different contribution methods we accepted. There's a lot of branches in here. If we had done only Ethereum, then all of this would go away and would be super straight and we would be already done. But we're not. Lesson number 4, use a smart contract. Again, we couldn't do it because at the time there was no battle-tested Open Zeppelin crowd sale contracts. But these days there are very well battle-tested crowd sale contracts. And I would strongly advise that you use one of the open source ones that have been audited and vetted by big players in the field. And if you really need a custom one, audit it well, because all of you might have heard about the DAO and the parity multi-sig hack and how many hundreds of millions of dollars have been lost due to bad smart contracts. Another thing is the community will expect you to. So for our second round of ICO, we got a lot of, not hate, but a lot of people, well, you're not using a smart contract, you're scammers. Whereas 3 months before, it was totally not expected, and that's how quickly the tides change in cryptocurrency. Lesson number 5, you will get scammed, for sure. If you do an ICO and you have a semi-decent marketing, then you will get scammed just because you're a high-value target. We had extremely sophisticated scammers that created websites that looked almost exactly like ours. So they definitely had to put in a day, multiple days of work to pull that off. All the JavaScript was all working. So it was pretty sophisticated. And they get domains that look almost like yours, where instead of an I, they use an uppercase, lowercase l or whatever. And it's not hopeless. That's what we learned. So at first we were like, fuck, these people are taking serious money, and they extracted 10K or so from our contributors. But then we started to research, and there's a lot of databases and communities that fight back scammers. So first of all, obviously, educate your users, tell them, hey, only this domain and only this Ethereum address is the official ICO address. There are multiple databases, for example, Ethereum scam database, which is, I believe, curated by Etherscan and enforced by MetaMask. Etherscan itself has a scam database. There's a Google anti-phishing team. There's an abuse IP database when people come to your chat channels and try to private message your community and try to extract money from them. And in our case, we reported it directly to the domain and hosting providers, and we got the scammer taken down within 2 or 3 hours. So it's definitely possible. It's not a hopeless battle. Lesson number 6, all eyes will be on you. An ICO, it's very interesting. An ICO kind of turns you into a public company. And so it has some shared properties. You will suddenly not have to answer your 1 or 2 VC investors in a board meeting who will try to push their agenda if you're unlucky. But now you don't have that problem. But on the other hand, you have thousands of people in your Telegram channel who will watch everything you say in every channel very closely, and things will get blown way out of proportion. So if somebody has a bad day and uses wrong word, it will suddenly be, hey, brick block, hey, these guys are scammers. So yeah, it was something we had to learn. And you will be held accountable to your promises, which is good. And what we had to learn is communicating dates is a double-edged sword. As many of you might know from the IT industry, estimation is a programmer's bad dream. So it's almost impossible to estimate more than a couple of weeks into the future accurately, especially not when you're doing something new that hasn't been done before. So it's almost impossible to say, hey, in Q3 we will have done this and that. You can get a ballpark figure, but be very careful that it can't be interpreted as by December 31st of 2021 we'll have done exactly that, because people will hold you accountable. So it's a slippery slope. Lesson number 7, you will have haters. You'll be public, there'll be people that support you greatly, but there will also be people that either because they're scammers or because, you didn't keep a promise or were a couple of days late with something, will turn around, and we've all seen Facebook and Twitter feeds where it gets nasty really quick, and there are a lot of trolls in the online world. Same in crypto, so it can be tough. People will be nasty. We had people like taking screenshots and from our support channels and photoshopping and then publishing it on Bitcoin Talk and trying to put us in a bad light and bad-mouthing, telling our CEO that he's, I don't know, motherfucker, on public forums. So you have to get a thick skin. And for us, the biggest lesson is always return to why you're doing this. After a hard Telegram hour, there will also be other people, and return to why you're actually doing this. Unfortunately, pixelated. Slides got raped a little bit by this beautiful Microsoft display. Those were a couple of exchanges from our Telegram channel. Some hilarious ones. Well, we're waiting. It's everything gets commentated. Greedy founders, they took all the money. So it's like a soap every day. Sometimes it's hilarious. Sometimes it gets you down. And the next lesson is the flip side of that. Care for your community. Your community is your greatest asset. So these are people that not only in a classic online world have signed up, created an account, which is a little bit of buy-in, but what's the worst? Yeah, they gave you your email address and the name, and they don't really have a lot of buy-in. If they invest in your ICO, they have bought into what you're doing. And it's not, hey, I'm clicking the newsletter and maybe I'll follow up. A lot of these people have really invested in what you're doing. And if you do it well, if you treat them well, if you're patient, your community can be your greatest asset. And there's this super interesting blog post called 1,000 True Fans. I believe it was by Seth Godin. It says basically, if you manage to get 1,000 people that trust what you're doing, that are your fans, that pay money to what you're doing, then you have to fuck up pretty badly to not make a business out of it. And in ICOs, you typically have a lot of people really quick. What you can also do is involve the community in product development. So they are so invested in what you're doing, and a lot of people actually make good suggestions and avenues to explore. Again, double-edged sword. If you open it up too widely, then they will expect you to do everything they say, so use that one with care. You can even find potential new coworkers. We have this very cool Telegram guy called Hash Brown, who from one day to the next showed up and nobody paid him anything, and he started helping out people and answering questions, and he's an admin in our channel now. We have never met the guy, but he's an all-star. We call him Mr. President. He's our community manager #1, just because he believes in our project, and that is the really rewarding side of building the community. These people come, they believe in your idea, and they want to help without anything in return. Lastly, quick sidebar, Slack is great, but at the moment, maybe not for public channels. Like, there are a lot of things in Slack that scammers can exploit. For example, Slack bot auto-response. It's very hard to control Slack. That's why we switched to Telegram. I believe Riot is also getting better and better these days. Yeah, I'm going to skip this one. Hash Brown, that's the guy. He's basically always on 24/7. I don't know what he does, but everybody loves him. Hash Brown is the best. Help me out. All good. Hash Brown, if you see this, you're a hero. And last but not least lesson, it's hard. And ICO is hard. It seemed a bit easier in the beginning, but then you run into a lot of issues. But the bottom line is it is worth it. BrickBlock wouldn't exist without the crypto community and ICOs. We would have probably given away a good chunk of the company, maybe even more than 50%. We would have taken a lot longer to raise money. And yeah, ICOs can be just a more decentralized and democratic way to make money to raise money if you make it so. And for us, it's been a tough but also very rewarding journey. And yeah, I hope if anyone wants to do an ICO, take these lessons to heart. It's not as easy as it seems, but it can be very, very rewarding, and you can build something really, really great with the community together. That's it. If you want to check us out, click on one of those links. I believe the slides are going to be shared. And yeah, obviously, as everyone, we're hiring. I have to leave rather soon, but Gonzalo here, one of our business developers, is gonna stay here. Hit him up if you want to chat. And yeah, thank you very much.
Because Philip has to leave, we've just got time for a couple of questions, if anybody has any. Any questions? Yeah.
How far were you with your product when you made an ICO? You had a white paper, you had a prototype?
Yeah, so we decided to split it into 3 phases to prove the community that we're trustworthy. So our plan was, and we're kind of still following it, to first do a white paper. Based on that white paper, raise a little bit of funds in our pre-ICO, which we did, to then have funds to build an actual product. And we developed an alpha platform that has real smart contracts on the test network, and to demonstrate that we're actually building stuff and we're not just a white paper. And with that momentum, we've done the real ICO to show people, hey, we're real. And now we're trying to go to production, do something in the real world, not just testnet. And with that momentum, then do the last ICO. So basically, we're trying to do it in stages, and each time we try to prove a little bit of more trust, and then ask for more funds.
But basically, the first contributors, they will get diluted, right? So what do they say about this potential ICOs? I mean, it's like multiple kind of equity issuance.
They won't get diluted, so the plan was all along to have 3 phases. So everyone knew, even the pre-ICO contributors knew going in how many total tokens there would be.
So you don't issue new tokens, you have already like a pool?
No, we have one pool, and in each section we sell a portion of the pool.
Okay, thank you. Thanks. Okay, we do actually have time in the schedule for a 10-minute break, but did you want to have a kind of show of hands if anybody would rather, anybody want to take the break? Show of hands? No? Okay, in that case, we'll carry on with our next speaker, if that's okay. So we've got Peter joining us. Peter's got a very strong tech background, and he's going to tell us a little bit about the banking industries and the different technical challenges he faces as a CTO of Solaris Bank. Welcome.
All right, thank you. I'm very sorry that I'm drinking beer in front of you. So we came here, thought there will be beer, and also to be a bit prepared for the talk and to make it happen in a better way. So so we thought we cross the street to the petrol station and grab a beer. But I think they got the supply. So my talk will be, or is called PSD2 on steroids, and why I entitled it that way, I'm going to present to you now. So first, hi, I'm Peter. I'm a banker actually. I think so. Thankfully to that screen, I never looked that slim, so I like that one. I need to take a picture. I'm the CTO at Solaris Bank, and Solaris Bank is a bank that is founded 2 years ago, and we are based here in Berlin. And I think the interesting aspect about also me speaking here is that all the other speakers kind of built something up in the crypto space completely from zero, taking the advantage of all the things, of all the technology, of all the potential that technology has. And I'm a banker, and I'm working in that environment that was actually mentioned on Mac's slides as being disrupted. And for me, it's kind of the opposite situation, because we founded that bank 2 years ago, and I think we're already much more technology driven and much more modern than all other banks are. So because the platform that we built up is purely like providing bank as an API platform, kind of an AWS for banking. So we don't have branches, we don't have ATMs, we just have APIs for doing KYC processes, opening bank accounts, doing transactions, doing that for all the various kind of different legal constructions, so like legal entities, natural persons, doing scoring, doing loans and lending products for SME and for natural persons, also pooling accounts, so conditional payment stuff. So like everything is we have a MasterCard integration, and this means we do everything through APIs. And traditionally, fintech companies, but also other digital companies use our APIs to become physically like a bank, because they use our infrastructure and our license umbrella to act like a bank. But in the background, we are doing all the stuff and making sure, also on the compliance side, that everything works. Well, I think this is a pretty amazing business model. We're 150 people now, so this is all fine. But there's this crypto thing going on, and I'm also very passionate about it. And so the question was, how do we get into it? And so I gave my talk the title PSD2 on steroids, because for me the very fundamental part with working in banking and being confronted with blockchain, cryptocurrencies, crypto assets, and all this decentralized technology is that. So our business model is based on centralization. So like any banking business was built on top of the fact that we're holding the data of the people. So we hold the amounts that is stored in the bank accounts, and we also physically own the data. So we just provide it to the user through a front end, through online banking or whatever. But so we are owning that. And so there's this initiative by the EU called PSD2. Have you heard about it? So maybe show of hands. PSD2. Okay, a few people from finance world. That's great. So Payment Service Directive was invented to kind of set a standard to, like, one thing amongst others, to open the data that is stored in bank accounts, and also to make possible that users or customers of banks can very easily switch between the one bank to the other, and that the data is made open. And so this is a very big thing in the banking world, and I think the banking world is talking about it since years. So I'm a banker since 2 years, so it's really years before me that the initiative started, and it's really, so the bankers are scratching their heads because the data being opened to other banks, but also to other players in the financial world, is really not planned in their business model. It's because their business model is based on a walled garden. I own the data, I just give it to you, and that's it. And but now coming from the other direction, so what if a user or like a customer of a bank would be able to really take the ownership of the data and really decide who can access the data and what you can do with it, and maybe get a financial product, link it to my wallet, and then interact with financial services like this. And well, there's this fancy technology, the blockchain. I think I don't need to explain it anymore because we already had that in the first talk. But it's very interesting because this really leads into a situation that we are now facing in the banking world, that we are in the transition of this, like, yesterday world, banking and branches, everything, like, the truth is happening on the banking service. We have the already more open world with Solaris Bank that offers this platform ecosystem where we also connect with other banks, other financial service providers in the background, and bring them together on a marketplace. And in the future, you would have this decentralized world with almost the banking in your pocket, because you store it, you are your own custodian, you have your hardware wallet, and you can decide all the things. So and also if you look into the blockchain space, the technology that is used completely changed. So you have these decentralized technologies around also IPDB, IPFS, and of course Ethereum as kind of the application layer. And the question is, so where does banking go? And so this is kind of the main slide where I would like to spend now the last minutes on, because on the left side here you see how I always call it from the developer perspective, the four main use cases of a bank. So, in a bank, you have you get provided that your funds, your assets, are stored securely, and that I can access it 24/7 from everywhere. So this is like the one use case of a bank. The second one is to send money or value from A to B, so to do transactions. You have lending scenarios, so I want to get money, I want to get a loan to buy a house or to buy a TV or whatever, and you have investing use cases. And this all is kind of surrounded by the fact that because we are a bank, because we have this heavy compliance setup, because we get controlled, we introduce ISO, ISMS, and all these things, because they're trust building mechanisms. So we load all this compliance stuff on our shoulders because we are a centralized entity, and we want to give like our very best to prove you that your money is safe with us, and that we take care, and that we have processes around security that you don't need to wake up at night and like, oh, is my money safe? No, so we have all these mechanisms. So now we are moving into the decentralized world. So what is happening there? And in the end, the bank, as I mentioned before, is not responsible anymore to store the data. So you have the blockchain, you have the different nodes, the data is distributed, you have the cryptographic layer that just makes sure that that everything runs smoothly. You can trust into the system and also into the source code that's behind the system. And so the way I see it personally is that we have the wallet in the future kind of as the core central point also for banking in the future, because the wallet will become the bank account of the future with some enhancements, so that I can not only store like fiat assets or like money assets, I will have my investments in there, I will have my, I don't know, rental contract with an Airbnb-like company, I will have my smart contracts for insurance products and so on. So this will be kind of the main central point for all your activity, not only in finance world and in insurance world, it will be like almost for everything. And on top of that, you have like a layer for security and identity. And so as you know, so many of you did ICO investments. So there are really tons of projects trying to cover digital identity with the blockchain. And this is kind of the missing piece for many applications, because we know blockchain technology is pseudonymous, and some of them are also really anonymous. But still, to build the bridge between the real world, also like the real governmental, also financial world, also this world with terrorism protection, AML, anti-money laundering, and so on, the identity is really a very important thing. And so also me speaking as a banker here, I'm also totally aware that so banks are, of course, kind of big institutions, and maybe sometimes you ask yourself, why should they be there? But I think the really fundamental thing that we do for our society is that we do this AML protection and screening, because we don't want like people to we want people to pay their taxes and so on. So I think this is also something beneficial for society. Sorry for the side trail. So identity very important in the blockchain space. Also processes around security, because once I have my whole, let's call it digital identity in a wallet. So with all my contracts, all my assets and so on, and I go skiing and I fall on my head and I don't know where I stored my private key, I'm really fucked up. And there are multi-signature wallets, there's technology around that, so to kind of cover with that. And I personally believe that this could be a very interesting point also for a bank, because we have this kind of centralized trust building mechanisms, and we have all the security processes in place. So I believe that sometimes even in the decentralized world, you need some centralized instances that you can trust a little bit more than the fitness startup around the corner, And I think that companies like us are pretty much able to fill that gap. And then going one level up, but I talked a lot about it already. So financial services, like loans, like investment products, will have a digital representation in smart contracts. We heard about ICOs today, already 2 talks, so things will go into that direction, and you can almost resemble almost any financial product that exists today in the digital world and even do more. And just to make it complete, to go to the lower levels here, I see these 2 aspects. On one hand, if it's the job of a bank to make sure that money gets sent from A to B. So if we now go to the blockchain world, well, then a bank should do mining or doing like proof of stake mechanisms, running nodes, and also making sure that money gets from A to B. So in the end, we need to be engaged in the networking layer. And last of it all, there are many more services that we can do. So one big problem that I see, especially in the space here in Europe, is that there are not that many custodial services. So we can provide kind of the infrastructure to store keys or backup keys securely, develop security processes around that. And from my point of view, this will be the role of a bank in the future, making sure that your money, your assets are safe. Additionally, of course, so the bank pretty much acts at the border between the fiat world and then in the future also of the crypto world. We should also offer services for exchanging money, for like getting fiat money in, and just bring it the fastest way, but also the most compliant and most secure way into the crypto space. Okay, so what are we doing there? As the CTO, I was luckily able to hand over all the operational stuff in product development to my head of engineering 1 year ago. So I'm only focusing on the R&D topics, and therefore I focused on crypto topics pretty much. And we came up with kind of a three-step approach. The first step is that we received a lot of requests from crypto startups who want to use our KYC, our bank account, our escrow, conditional payment, but also MasterCard logic to integrate that with their crypto products. And so there we're pretty much already accessible, so you can use it from almost yesterday. Additionally, because this has always also been a part of our business, we offer you license umbrellas. So there are some business models in the crypto space that are regulated. For example, if you do like own account trading and stuff like this, so you can talk to us, and we can help you to get kind of a license umbrella for the European and German market. So this is what we do in this first phase. Additionally, we integrated with a crypto exchange where we also connect our bank accounts with them, so you can very easily and very quickly get fiat to an exchange, and then enable your customers or your users to swap them into Bitcoins or into Ethereum. So this is like almost then has the same effect of if the market goes down, you can sell them, and then you have real euro there and no tether or that shit. The second phase is that we start to build products only for the decentralized world, and you've seen that slide before. So there are many things that are very interesting, especially like security processes and all that kind of stuff, because this also empowers our users today. So if I lose my online banking PIN, that's maybe not that critical as when I lose my private key, but it still provides a value if I build a very cool and smooth many-factor authentication process, like getting an SMS, printing that out, sending by fax. No, I'm just joking, but just building like a multi-factor process that just proves that it's you. So this can have benefits like for both worlds. And phase 3 is just like, I can't talk about that because everything will be different, but I'm very looking forward to it. And I don't know how I'm in the time, But yeah, I just say thank you, and maybe you have questions. Maybe we have time for questions. Otherwise, I'm there.
Any questions for Peter? No? Okay.
Great.
You must have covered it all. Thank you. And next, or last of our speakers, but definitely not least, is Benjamin. Benjamin, after 12 years of development, is now taking the plunge on his co-founding his own new startup. So welcome, Benjamin.
Good evening. Come on. Okay. Can you help the techie out maybe a bit? All right. Yeah, okay. Hi. So I'm Benjamin. I'm the CTO and co-founder of Base Global, and I would like today to talk a bit about the blockchain, smart contracts, the upsides, but also the downsides, and have a little look into the future, maybe if we get time for that. So why do we need blockchain at all? So what's the point? Point of that is, in two words, of course, trustless trust. Blockchains are decentralized. Decentralization gives us a robustness. We don't have a single point of failure. We don't have a single point of attack or manipulation. In a centralized system, the server goes down, your system is down. In a decentralized system, a couple of nodes go down. It just doesn't matter. And yeah, that gives us a robustness. What was mentioned before, what's on the blockchain and is already verified, that's there. You can't change it anymore, you can't change it back, that's just there. No way to manipulate that in any way. And that can be verified. Like, you can verify that yourself if you want to. You can download the whole blockchain and check that all the signatures do check out, so you don't have to trust anybody. It's just inherent in the tech, and you can have a look for yourself if you want that. And so, yeah, that gives us trustless trust, which is a nice concept. Don't have to trust your bank or your neighbor, whoever. Smart contracts. What, why? Basically, a smart contract can do for code what a blockchain can do for data. So all the upsides we got for data on the blockchain, we can have for code and smart contracts. That also means a smart contract, once it has been deployed to the blockchain, can't be changed anymore. And you can't take it back. If it's there, it's there. So you better make sure you got no bugs in that. And well, a smart contract is a program, of course, and a program does exactly what it's designed to do if you don't have bugs, and nothing else. So a breach of contract is inherently impossible, basically, because, well, it's a program, right? And you feed a contract something that it's not designed to take, well, it will just not take that, nothing happens. And again, same thing as with data on the blockchain, it's just inherently trustworthy. It's a nice thing. Come on. All righty. And these features, these things allow us to do things that have been just literally impossible before. Completely new things become possible. A few are tried. Most of them, I think, have not even been thought of. And one example that you all know, you want to go to a concert, you pay 500 for your €100 ticket. That's not cool. And why can this happen? Well, ticket currently is a piece of paper or a QR code. You can just sell that away. We could reimagine that. We could just reimagine lots of things, for example, these tickets. And if it's not a piece of paper, maybe it can be a bit more advanced. And this is what we will do with the technology of blockchain and smart contracts, specifically the latter. We will just turn event tickets into smart contracts. And imagine you're the artist. You can just decide if the ticket is even resellable at all. You can also decide if you want to set a max price, or you can also just say, hey, do feel free to resell at as high a markup as you can, but I get 80% back of the profits. And if the smart contract is designed like that, then there's just no way to not adhere to that. There's just no way to get around it because it's a smart contract. And right. So what are the problems with blockchain? That's the problem, actually. Blockchain's basically dead already. Long with DLT, though. DLT is great stuff. These are two of the very first boats humanity has made. Outstanding, great step for humanity, very important. You can't overstate that, basically. The importance of the first boat for humanity, obviously. But I think you would agree, it's not a great boat, eh? Like, I wouldn't want to ride that. That's the first car. Same thing applies. Outstanding, amazing step for humanity, can't be overvalued. It's still a pretty crappy car, though, honestly. Wouldn't want to ride that. So, do recall these pictures in a moment, please. So what's the problem with blockchain? Couple of things. Oops. So the main issue with blockchains, all current implementations, is the scalability in space as well as in time. Time-wise, the people of you that own a bit of crypto will know this. Specifically in the last months, we had transaction times in some currencies over a day, not really ideal. Why is that? Well, there's a limited capacity in each block. There's a limited amount of blocks in each per time, in most chains at least, and so you just have an upper limit of what you can put through this per time. And well, we have reached that in some chains or are close to it. The other thing is the data volume. For example, the Bitcoin blockchain in December last year was already 150 gigabytes. And the Bitcoin blockchain is used nearly exclusively to transfer, well, Bitcoin. So there's not much going on there. It's 150 gigabytes last December. The Ethereum blockchain in last October was about over 300 gigabytes already, and Ethereum is pretty new. And we're already over 300 gigabytes. I will now make a number up. I guess that less than 1% of all humans are actually already using blockchain tech. Now, if we look at the problems we have had already with the scalability, and now imagine that 20–50% of all humans use that tech, well, we have an issue, and there's no way around that, so we have to come up with something else, eh? And that, I think it was in December when the Bitcoin fees went into the triple digits in dollars. That are the reasons. There was just so little capacity, so many people wanted to do something, and so the miners could just, well, take the highest fees, and people were willing to pay that. Another point that I find is becoming more and more important is that proof of work is actually killing the environment, and so we will have to move away from that. Admittedly, proof of work not inherently a blockchain problem, but you could use a different method of verification, basically. But that also, proof of work has no future, obviously. So how's DLT better? What is DLT? Is it not just a fancy word for blockchain? No. No, it's not actually. So DLT stands... where have we been? Yeah.
If you just touch it rather than explain.
Ah, okay. Oh, yes, indeed, thanks, indeed. So DLT stands for Distributed Ledger Technology. Not a sexy term, but a very, very sexy idea, actually. A blockchain is nothing but a distributed ledger, but the cool thing is that there's loads of ways to actually implement a distributed ledger. Blockchain is just, and now we get back to the picture of the boats and the car. Blockchain is just the first implementation, the first idea that was actually realized of how to do a distributed ledger. There's tons of other ways. Most of them, I guess, are better than blockchain actually because of the aforementioned drawbacks that are inherent to blockchains. And there's different things, different ideas. I also think that the most awesome things that will be coming in this space, nobody has even thought of yet. I think we are this early in distributed ledger technology that we can't even see what's coming. I'm very excited about that. Let me give you a few examples of currently, two currently existing and one soon-ish existing distributed ledger that is not a blockchain. Example one, IOTA. So IOTA doesn't use blocks. It's also not a chain. These squares here are individual single transactions. and you don't even have a miner or anything. How things get verified here is an interesting concept. You want to make a transaction, you have to put the work in to confirm 2 other transactions. That's the principle that IOTA uses. Mathematically speaking, that's a directed acyclic graph. IOTA calls it a tangle. I guess that sounds a bit nicer for marketing, maybe. And in theory, this idea has the upside that the more people use it, the more performant the thing gets. The more people use it, the faster your transaction is confirmed, because, well, the more people are using it, the faster your transaction has been confirmed X times. Another example for a non-blockchain DLT is RAI blocks. And in RAI blocks, every address has its own blockchain. And the way that works, they call that a block lattice, by the way that works is that I want to send you some RAI blocks, and I will create a transaction, a sending transaction, and I sign it with my private key and I put it on my blockchain. And the next time you open your wallet will search the block lattice for sending transactions to your address. If there are some, it will create a receiving transaction, which your wallet will then automatically sign with your private key. And these 2 put together then make a transaction. That's the way this works. Also an interesting concept. And seems to me at least to be inherently faster than classical blockchains. Basically, it's between you and me, so to speak. We don't even need to involve the whole network necessarily. And what I personally find the most interesting right now is that Ethereum, currently just a classic blockchain with smart contract capability, of course, but still just a blockchain. Ethereum is actually going to move away from a strict blockchain implementation. And I don't know the timeline of that, but it's on their roadmap. And they will go for parallel blockchains. Simple example, let's say every address beginning with 0 has its own chain, every address with 1 is on a chain, and so on and so on. And that means if I send a transaction from one address with 0, beginning with 0, to another one also beginning with 0, it's just on chain. It's basically the same as using Ethereum as is currently. They also have a very clever but also extremely complicated, so I won't even start talking about that, way to make cross-chain transactions securely possible. So yeah, I like this because it kind of makes my point. I think Ethereum is a blockchain and they have seen that's just not the way forward. They call this sharding, by the way. So, nearly at the end, what does the future bring? Interesting things. Most current DLTs will go away. Most of what we have today will die. That's not a question. We have thousands and thousands of cryptocurrencies, and well, obviously there's just no point for that. And most of them are just the same anyway. So it's a bit like the early phases of the internet. I mean, Netscape's no longer around, AOL is no longer around, but the internet certainly is and won't go away and change the world. And this is where I see distributed ledger technology. Like, it's hard to see where we're going. The best ideas have not even been imagined yet, but I'm pretty sure it's going to be great. And yeah, with that, I'd like to thank Iconic Lab for working with us. We are stoked, and I would like to thank Darwin Recruitment for hosting and organizing this event. Thank you. Sorry. Any questions? Please. Right. I'm not sure if I quite got your question acoustically. If not, please just interrupt me. The energy issue is not necessarily strictly inherent to blockchain. It's actually the method that is chosen to verify transactions and to verify blocks. For example, Bitcoin uses a thing called proof of work. And that means that the more work you put in, the higher your chance to mine the block and get the reward. The problem is, if double the power is in, double the hashing power is in the network, because, wait, Bitcoin is worth a lot now, and a lot of Chinese people think I'm going to make money, and they do, then the network automatically adjusts to increase the difficulty. So you have double the hashing power, you have double the difficulty, and so the block times stay the same, which is the reason that Bitcoin currently I have read, don't quote me on this, it might be wrong, but I think it's currently using a couple of % of the worldwide energy production, which is of course terrible. But there are other things than proof of work. There's proof of stake, for example, and a couple of others. And so certainly going into some of these directions away from proof of work. Does that answer your question?
But I mean that DLT doesn't specifically enforce,
Absolutely right.
right? So it's still up to the currency or whatever is using the blockchain.
Yes.
to decide.
Absolutely right, yes.
Just one more question. I was thinking about the Lightning Network as an off-chain solution for scaling. What do you think about this direction? Because, or in general, I mean, that you have blockchains and you have some layer on top.
Good question. Interesting stuff, definitely. I find Lightning a very interesting project, and I'm looking forward to see some implementations. I'd like to use it and play around with it a bit. Might be a really good thing. But, so if we were to draw this, right, if we were to draw the blockchain and then the side chains, strictly speaking, I would argue it's not a blockchain anymore because a very strict blockchain doesn't even have side chains that go back in or anything. And then there's also the question of if off-chain things, because they are a bit more centralized, of course, they're not on-chain, they're not that distributed. I think it's good for some use cases, but for others not so much. Definitely for the Bitcoin fans, I think it's a lifesaver. I think Lightning is going to extend the lifespan of Bitcoin tremendously, absolutely, yeah.
Thank you. Okay, so thank you to all of our specialist speakers tonight. We do have some pizzas and drink available if you want to grab a slice of pizza for the networking session. If you are potentially interested in speaking at one of our future events, then come and grab me, and we will announce the competition and the prizes just before we close. Thank you.